Guys, this is S&P 500 Technical Analysis for the week of December 10th, 2022. Now guys, if you notice that the previous week this the entire movement. This entire movement was in between the zone of 4035, the zone of 4035 and the zone of 40 and the zone of 3937. However, on Tuesday it breached this the zone of 3937, and at one point of time it was like that it is going to come down further, but no, that did not happen because this was a potential trap. So what we knew last week is that the entire movement, no matter what, up or down, heavy, up or down, doesn't matter, this the entire movement will be in between the 3937 and 4150. Now because the 4035 in the so this is the 4035, the zone of 4035, it was in the picture. So this the condition was that if on Monday, if the S&P 500 is able to survive above the zone of 4035, then for the rest of the week the entire movement will be confined in between the 4035 and 4150. But if on Monday, if the S&P 500 fails to hold above the 4035, then it will come down to 3937, the zone of 3937, not 3937, but the zone of 3937, and then the 3937 will be able to hold this the market, means the stock market, this is the S&P 500. And then what will happen in that case? The entire movement will be then confined in between 3937 and 4035. Other than that, what else I have mentioned in my S&P 500 technical analysis was that if the open and the close is above 4077 on Monday, especially on Monday, Monday was critical. If the open and the close is above 4077, in that case there will be a bullish breakout. So earlier there was this the breakout failure, right? But that breakout failure, that can be nullified only if the open and the close is above 4077, or if not the open, then at least the close is above 4077 on Monday. But on Monday, neither the open nor the close was above 4077, and then it came down. Okay, so this is what we knew on Monday, that this is happening. But on Tuesday there was something interesting. Okay, interesting thing was that you can see that the S&P 500 intraday, it was 1.8% down. However, there was the catch, and the catch was that the volume was not in line with the 1.8% downward movement. This means that there was a potential trap. So in my third update on December 6th to my YouTube community members, so this was something that I mentioned, that we are moving into a potential trap because the market, means the S&P 500 is coming down and it is going to hit 3937. But the problem is the volume. The volume is low in the stocks which are coming down heavily, means the stocks of the S&P 500. Other than that, the dollar index and the bond yield is not yet up or bullish or are heavily up, while the stock market is coming down. So how is it possible that the stock is very heavily down, index is very heavily down, and the volume is still below average? Not just average, but below average. Now, in my final update on December 7 to my YouTube community members, I mentioned this thing very, very clearly, that it is the stochastic RSI. The only factor which is going to play an important role in the technicals is the stochastic RSI, because today the K channel of the stochastic RSI is 0. So on Wednesday, when the S&P 500 it was coming down, the K channel, it was 0. It becomes 0. And this K channel 0 means that it has compelled the S&P 500, the stock market, to give a potential reversal, means a bullish reversal. And this bullish reversal, okay, it was seen on the Thursday. So there was a slip that was supposed to be formed on the 4-hourly chart, but because this is the PPI data, it has simply ruined the setup, and then the slip that was about to be formed, that did not form. Rather, we have seen a crossover in the moving averages. This crossover, it was a significator of the bearish trend. So guys, if you have not subscribed to this channel, then please subscribe the channel and click on the bell notification icon. And other than that, if you want to get these updates, these are daily updates of the S&P 500, then you can join my YouTube community. And in order to join my YouTube community, you can click on the join button that is there just below this, the title of the video. Now guys, let's discuss the agenda of this S&P 500 technical analysis. So in this the agenda, the first point is the S&P 500 technical analysis on the weekly chart. So through this, the technical analysis on the weekly chart, I will tell you that what is happening in the S&P 500, in the entire stock market on the broader scale. Weekly chart means that the big picture, is the trend. So even though S&P 500 it has moved up, okay, quite a lot, but still the long term trend in the stock market is the bearish trend. There is no change in that trend. So we will see, okay, technically again on this the weekly chart. Then the second point is the CPI data and the probable movement of the stock market or the reaction of the stock market. So this is the CPI data. It will be published on December 14th. On December 14th, Tuesday, this the CPI data will be out. And once the CPI data is out, then we will come to know that how the S&P 500 and the entire stock market and the global stock markets are going to react to it. Then in the next point, that is the third point in our agenda of this S&P 500 technical analysis, I will give you the support and resistance levels for the S&P 500. So just like, okay, this was 4035 zone, this was 3937 zone, intermediate zones, etc. So I will give you these the zones, okay, and these the levels that are going to play very important role in the movement of the S&P 500. Then comes the fourth point in our agenda, and this the fourth point is S&P 500, and this fourth point is SP500 technical analysis on the daily chart. So I will do this the technical analysis on the daily chart. See, this was the weekly chart, right? And this is the daily chart. On the weekly chart, we look into the trend, okay, and the possible. This is the broad picture. Daily chart means we look into like what is happening in the S&P 500 and the entire stock market on this the daily basis, and how this thing is going to work or how the things are going to unfold. Then comes the last point, fifth point in our agenda, and this is the probable movement of S&P 500. Now guys, I want to make this thing clear that this S&P 500 technical analysis is not a financial advice of any kind, in any form or in any manner. This S&P 500 technical analysis is not an advice on any kind of trade setup. Because I do not know how you are going to interpret my S&P 500 technical analysis, this is why I will not comment on an individual's profits or losses or the trade setup. So guys, once again, if you have not subscribed to this channel, then please subscribe the channel and click on the bell notification icon. And if you want to join my YouTube community in order to get these the daily analysis, the daily updates of the S&P 500, then you can click on this the join button that is there just below the title of the video. Now guys, I am going to begin with this the first point in our agenda, that is the S&P 500 technical analysis on the weekly chart. So guys, now we are going to discuss the first point in our agenda, and this is the S&P 500 technical analysis on the weekly chart. And guys, once again, if you have not subscribed to the channel, then please subscribe the channel and click on the bell notification icon. And other than that, if you want to join my YouTube community in order to get the daily analysis, the daily updates of the S&P 500, then click on this the join button that is below the title of this the video. So guys, this is the weekly chart. Let me write it down. Weekly chart, W as in weekly. Weekly means that one candle represents 1 week, not 1 day or 1 hour. One candle means 1 week. Now when you look into this the chart, then what you are going to notice is that the S&P 500, it was coming down, and then it moved up, and then there was the lower high, it came down, and now it is further moving up, and looks like that it is going to give up and it is going to come down, right? Not exactly. It still has some momentum left. There is still some momentum. So before it can actually give up, there is still some momentum through which it can either hold or it can try to move up, right? So this thing I'm going to tell you on this the daily chart. So as of now, if you are thinking that it is going to come down, yes, it can come down, because already this the stock market, this the index, this the S&P 500 index, it is already overvalued. It is trading okay on these the levels, but because of the formation of this the red candle, this is the very heavy red candle. Now that this is the overvalued, okay, we were talking about, so that the overvalued thing, okay, it has now come down, okay, it has simply calmed down. So now in my previous S&P 500 technical analysis, I mentioned this thing clearly that because this was a bullish candle, okay, bullish, okay, sorry, hold and then the bullish. So if on Monday or if on Tuesday, if the S&P 500 try to move up and if it breaches 4072, if it breaches 4072, then what will happen? Then the K channel will become 100, absolute 100. And once we see that the K channel is absolute 100, then there will be a very heavy fall. See, this is a small candle. This is a small bearish candle. Okay, the candle that we would have seen if the K would have become 100, okay, it was supposed to be a heavy candle, very heavy candle. So that was another reason why the stock market, okay, it was trying to calm down. It was trying to cool down. Anyways, so what we are seeing is that as of now, okay, it is still moving up. It is still trading up. Now it has come down. Okay, in the coming week, okay, initially on Monday, it can still come down. But after Monday, like on Tuesday, so Tuesday will be the decisive day. If the inflation, if the CPI data says that the inflation is further, okay, it is coming down, in that case on Tuesday itself we will see that it is going to move up. Other than that, if the CPI data, okay, if it comes like if it comes more than the previous one, in that case the market will be back to the long term bearish trend. Anyways guys, let's do this the technical analysis on this the weekly chart. First of all, this the Ichimoku. Because the S&P 500 on the weekly chart is still trading below the Ichimoku cloud, this means that the S&P 500 is bearish through the Ichimoku. And it is not just bearish, but it is saying that the S&P 500 is in the long-term bearish trend because still it is trading below this the Ichimoku cloud. So this the Ichimoku cloud. See, we often look into this the trend through the Ichimoku cloud, right? So it is still there, okay, below this the Ichimoku cloud. So it is still in this the long-term bear trend. Now comes the Bollinger Bands. This is the upper band of the Bollinger Band, and surprisingly S&P 500 is closed just barely just above the median of the Bollinger Band, keeping it bullish. So through the Bollinger Bands, S&P 500 is still bullish on this the weekly chart because it managed, it just barely by $1, it managed to close above the median of the Bollinger Band. Then comes the moving averages. Moving averages, now earlier, okay, it was clearly closing above these all of the moving averages, so it was bullish, right? But now what has happened is that it has come down and closed in between the moving averages in the conflicting zone. See, whenever the S&P 500 or any stock or any market or any stock market or any index closes inside in between the moving averages, then that is considered as the conflicted zone, because we never know technically that whether it is going to come out this way, okay, or this way. This means that this is the situation, this is the point of confusion, and whenever this kind of situation is seen, then we clearly mark the moving averages as neutral. So the S&P 500 is neutral through the moving averages. Now when we look into some other technical indicators, then you can clearly see that the MACD is more than the signal. Yes, that's true. So directionally MACD is bullish. However, both MACD and the signal are still negative. Both MACD and the signal are still negative, and this is indicating that the S&P 500 is still in the long-term bear trend. So although directionally it is bullish, but it is still in the long-term bear trend. Then comes the stochastic RSI. Now stochastic RSI, now the stochastic RSI K channel is merely less than the D channel. K channel is 91.39 and the D channel is 91.94. So because of this, the heavy, okay, or this the good bearish candle, earlier the K channel was 95, 96 approximately. Now it has come down to 91. But at the same time, the D channel, okay, it has moved up. This means that if there comes a bullish candle, okay, for any known or unknown reason, if there comes a heavy bullish candle, in that case depends on this the weight of the candle, the movement of the candle, these the K and the D both can become zero. And once both of these become zero, so that will be the point where we are going to call it as the lower high. The confirmed lower high means no more bullish movement. That's it, the bullish movement is done, and now the entire stock market will come down. Okay, so that will depend on the weight and the movement of this the candle. But as of now, technically through stochastic RSI, we are going to call it as a bullish market because both K and D are still above 90 in this the bullish zone. Even though the K is merely less than the D, it doesn't matter because both K and D are still above 90. This means that through the stochastic RSI, we will say that the S&P 500 is still bullish. Then the divergence is normal, not a problem. Then comes the volatility, okay, it is still normal. So guys, technically what we have noticed is that the SP500 is bearish through the Ichimoku cloud, SP500 is bullish through the Bollinger Bands, SP500 is neutral through the moving averages, SP500 is again it will be counted as neutral through the MACD, SP500 is bullish through this the stochastic RSI. So overall the picture is that the S&P 500 as of now will be considered as neutral, or it is holding its short-term bullish. Means either it is neutral or it is in the short-term bullish trend. It is still in the short-term bullish trend. See, there is no change in the long-term bearish trend. The long-term bearish trend is there. In the long-term bearish trend, okay, there is the short-term bullish trend. This short-term bullish trend is going to form a lower high, that's it. Okay, this is how we interpret. So guys, this is what is happening technically on the weekly chart of the S&P 500. And guys, just for the reference, when we look into this the Dow Jones, then what you can see, again a heavy candle. Now it is going to come down. So on Monday it can further come down. The Dow Jones can further come down to this the level that is 33,300. 33,300. This means that on Monday the S&P 500. This means that on Monday the S&P 500 is also expected to come down a bit. So when this the Dow Jones will come down, so will be the S&P 500 on this on Monday itself. So this means that on Monday 0.50%, okay, this the fall is still possible in the indices like S&P 500, Dow Jones and the Nasdaq. So guys, now let's move on to the second point, okay, of our agenda, and this the second point is the CPI data and its impact, its possible impact on the global stock markets, the American stock market, the S&P 500, Dow Jones and the Nasdaq. So guys, we are here to discuss the second point in our agenda, and the second point is the CPI data and its impact on the global stock markets, the American stock market, the indices like Dow Jones, S&P 500 and the Nasdaq. So guys, this is the chart. This is the chart of this the inflation. Okay, USIRYY. Sorry, USIRYY. So this is the United States inflation rate. The chart. Okay, chart of the inflation. Right. Now in this chart, if you notice that the previous this the inflation, it was 7.7, and before this the 7.7 it was 8.2. So there was a 6%. So there was a 6% decline in the inflation from this the previous one, that was 8.2. Okay, and now it was 7.7 last month. Now this the inflation, again this the CPI data, it is going to publish on Tuesday, that is December 14th. December 14th. Okay, this the CPI data will be out. Now we do not know that what will be the actual value, okay, of this the CPI data. However, what we know is that technically, see guys, whatever we are doing here, okay, this is all technical. And guys, once again, if you have not subscribed to the channel, then please subscribe the channel and click on the bell notification icon. And if you want to get these the daily analysis, the daily updates of the S&P 500, then you can click on this the join button that is there just below the title of this video. So guys, if you look into this thing, so this is a technical analysis. Okay, I already did this the technical analysis in my previous I guess last month only. Okay, this is the same thing. But now if you notice that the inflation is technically holding above the critical moving average. So the moving average is approximately 7.65 and the inflation is 7.7, more than this the moving average. This means that if the inflation comes anything above 7.7, anything above 7, around 7.7 or above 7.7, this means that now the inflation is holding above the moving average, and chances are that in the month of January we will see that it is further okay, it is moving up, because the stock market is not going to wait for January. So just after seeing this the inflation data, and if it comes anything above 7.7, then this means that the stock market will react to it, and it will react bearish. Now in order to see this the clear picture, okay, let me do this. Now in order to see this the clear picture, okay, let me show you that what actually we are going to expect technically. Again guys, technically, okay, I do not know this the real number. What will be the real number that will be published on Tuesday, right? So technically, if you notice that there is a clear fan out in the moving averages, bullish, and the last inflation that was reported, this the CPI data, it was more than this the moving averages, bullish. Inflation is moving above the Ichimoku cloud, bullish. Inflation is moving in the bullish zone of the Bollinger Bands, bullish. But the most important part, the most important thing, you will be surprised. And what is that? If you notice that the MACD, okay, there is a confirmed crossover in the MACD. So MACD is just 1.49 and the signal is 1.53. So it means directionally it is now bearish. However, both MACD and the signal are positive, means still there is the bullish trend in the inflation. There is still the bullish trend in the inflation. Until and unless both of these values become negative, we are not going to say, or we cannot confirm that it is bearish, that the inflation is going to come down. The MACD and the signal both are positive, holding the bullish, right? Directionally we can see, okay, that yes, directionally it is bearish, but if the inflation comes more than this the 7.7, then again there will be the change in this the MACD and the signal, right? But now the most interesting part, okay, that I want to show you here. If you know the technicals, or if you have subscribed to my channel for last many weeks or months, then now this is what you are going to see. So on this the stochastic RSI, the K channel is 0, not just 0, it is negative 0. Negative 0. D is non-zero, yes, but the K channel is 0. And what happens when when this the K channel, okay, it becomes 0? There comes a reversal. Means the chances of seeing a reversal are very, very heavy, because the 0 means that now the inflation has come down to the absolute lows. See, already technically or practically we can see that it is 7.7 and it is not at the absolute lows. But the technical indicators are saying that because of this the movement, okay, as of now wherever it is, this is going to be considered as the absolute low. Okay, now the only constraint here is that the K channel is 0, okay, no doubt, but the D channel is non-zero. This means that if there comes no reversal, this means if on the Tuesday, if the CPI data is again less than 7.7, in that case what will happen? In that case the K will remain 0, no doubt, the K will remain 0, but the D channel will further come down towards this the 0, and it may or may not become 0. So that depends on this the number, that what will be that number. Okay, based on that it may or may not become 0, right? But again, now we are at the junction where the K is already 0, and that means that yes, we should be ready to see a reversal in this or this a bullish reversal in the inflation, either this month, in the month of December, or if not, then in the month of January. This is confirmed, 100%. This is confirmed. There will be a bullish reversal, because technicals are compelling the inflation to give a bullish reversal either this month, in the month of December. If not, then in the month of January there will be the reversal, 100% confirmed. And if you are assuming, or if you are thinking that no, this is not possible, then let me show you. Historically what has happened is that in January 2019, the inflation, it hit the K channel, okay, means the K channel, okay, for this the inflation, it hit the absolute 0, negative 0, okay, and at the same time the D channel was non-zero. Then in the month of February it again hit the 0, but in the month of February, the D channel, okay, it came down, and so now in the month of March it was confirmed that in the month of March there will be a 100% reversal, because the K channel, it was 0 subsequently, like for two consecutive times the K channel was 0, and there won't be any third 0 in the row. Secondly, if the inflation comes down in the month of March 2019, then the D will also become 0, and that is like extremely rare, okay, extremely rare. That was the reason you can see that in the month of February 2019 the inflation, it was 1.5, and then in the month of March the inflation was 1.9. so there was an increment from 1.5 to 1.9, a very heavy jump in the inflation, okay, because the technical indicators were saying that sooner or later, so not later but sooner, or either immediate, okay, or the next month, there will be a heavy reversal in the inflation, and that is what we are seeing here. So there was this approximately 35 or 40% jump in the inflation in just 1 month. So guys, now I hope that the picture is clear, technical picture is clear. Whatever has happened historically, that is going to happen again, nothing new. So now what we know is that either the bullish reversal in the inflation, either it is going to come on Tuesday. If not on Tuesday, then 100% it will be in the month of January, and that technical recession will begin that January onwards itself. So guys, now you have the valuable information that the others, they do not have, right? So do not forget about this thing, right? And again, if you're my YouTube community member, okay, then we will wait and we will see what is happening on this Tuesday, and based on whatever happens on this Tuesday, we will see whether the lower high has formed, okay, or is going to form, or we are going back into the bull trend in case of the stock market. Because if the inflation comes anything below 7.7, then the stock market will be cheerful, and this means that whatever we are going to see, that it is going to come down, and it can come down, okay, to these the levels like 3907, okay, possible 3907, yes, this is there in the picture, or 3900, okay, it can come down to these the levels. But if on Tuesday, if the inflation comes less than 7.7, in that case there will be a bullish reversal, and then it will move towards this the 4150, or this the 60, means then the center rally will be in the picture. However, at the same time, if the inflation comes more than 7.7, this means that now, because in the month of December inflation is more than 7.7, this means now in the month of January also the inflation will be more than 7.7. Sorry, not more than 7.7, but the inflation in the month of January will be more than the inflation of the month of the December. This means that now, okay, this was indeed the lower high, and now the entire stock market is going to come down, and it is now back into the bearish movement, the long-term bearish trend. Now there is one more possibility, so not this is the possibility, but because what has happened is that on Friday the PPI data was out, the PPI data, and the PPI data was responsible that why we have seen the bearish candle. Although there was a very heavy, the 1% very heavy the upward movement in the pre-market, but because of the PPI data, what has happened is that the stock market, okay, it gave up. There was a gap down open, it tried to move up, tried to hold, but then it gave up, and then there was the crossover in the moving averages on the 4-hourly chart, confirming a bear trend. Right now, PPI data, last month the PPI data was 0.3%. okay, this month also the PPI data was 0.3%. if the PPI data was 3%, 0.3%, as it was last month, then why the stock market it came down? It came down because the Wall Street was expecting the PPI data to come down to 0.2%. okay, what is this, the PPI? This is the producer price index, PPI. okay, what it means? This means that this is the measure of like how much money the consumers are spending or paying to the producers. For example, if you go to the market to buy a packet of bread, okay, if you are paying the same, for example, okay, this is the $1, okay, maybe like $2, okay, for this the bread, that is the same, okay, as it was last month. okay, this means that the producer price index is still the same. You are paying the same price for a packet of bread as you were paying last month, or you might have, or you might be paying just a little more than that. okay, so this is the meaning of the producer price index. Wall Street was expecting it to come down by 50%, okay, from 0.3% to 0.2%. Wall Street was expecting, based on the comments of the Fed chairman. Again, guys, remember that it was the comments of the Fed chairman that pushed, or that gave the heavy bullish push on November 30th to the stock market, because the Fed chairman has said that the labor market is strong. Other than that, the inflation, okay, the tools are working, and looks like that the inflation is coming down. And yes, and the Feds are going to raise the interest rates, but there will be the moderate rate hikes, not heavy rate hikes, moderate rate hikes. okay, although there was nothing in that, okay, in those the comments, okay, because of this that could have helped the market to move up, but because the mood of the market movers like bullish, okay, they wanted it to be bullish. So even though everything was negative, everything was bearish in the comments of the Fed chairman, other than that there will be moderate rate hike. Rate hike itself, it's a big negative thing, but he said that moderate rate hike. So I don't know like how the market movers, okay, they took the news, and then intraday it was 3.5% up. okay, now because the PPI data, okay, it is saying that Wall Street was expecting a 50% decline in the inflation, that is not there, right? And people, okay, they are paying, okay, either the same, okay, or more for the produce, okay, from to the producer. This is simply indicating that this upward movement, okay, it was clearly a manipulated run. It was not a true upward movement, because there were no comments that could have supported this upward movement. That is why we are seeing that it failed to breach that trend line. It came down, coming down, and then once the PPI data was out, then the realistic picture was seen in the market. This stock market in the SP 500, Dow Jones and the Nasdaq, that the market, the SP 500 and the stock market, okay, it is going to come down once again. PPI data, it is an early indicator to the inflation that either the inflation is going to hold, okay, or it is going to move up. That's it. But again, okay, see, PPI data, okay, it is just one contributor, but it is not okay. It is not the only contributor to this, the CPI, right? CPI consider some other aspects. This is why, okay, we must not assume that because the PPI, okay, it was more than, okay, this thing, so the CPI will be, okay, either the same or it will be more. So the actual CPI data will be out on Tuesday, okay. And if you are my YouTube community member, then on Tuesday, okay, we will look into the picture. Once the CPI data is out, okay, I will tell you that how we are going to trade, whether we are going bullish or we are going bearish. If we are going bearish, okay, then where exactly, okay, there's the stock market, the S&P 500 is going to give us the opportunity to go bearish, okay. And because of this, the bearish, okay, where exactly it is going to come down, and what is the near future of the S&P 500 and this the entire stock market, okay. And also we will talk about, okay, this, and we will look into this, the possible center rally, okay. So this is all based on this the Tuesday, right? Once again, if the CPI is same, in that case the stock market can still cheer, the stock market can still move up. If the CPI data is less, stock market will move up. It will simply regain its short-term bullish movement. See, this is the short-term bullish movement. If the CPI data is more than 7.7, okay, by some significant number, maybe like 5%, maybe like 10%, in that case the stock market will give up and it will re-enter into its the long-term bear trend, and this will be, in that case, this will be considered as the lower high. That's it. Now guys, we are going to talk about the third point, okay, of this of the agenda of this S&P 500 technical analysis. And the third point is the support and resistance levels for the S&P 500. So we are going to see that where exactly the S&P 500 is going to move, where it is going to find the resistance, where it is going to find the support, etc. So guys, once again, if you have not subscribed to the channel, then please subscribe the channel and click on the bell notification icon. Now guys, there is one more important thing that I want to share with you, that if you want to get this the daily analysis, the daily updates of the S&P 500, in that case you can join my YouTube community. And in order to join my YouTube community, you can click on this the join button that is there just below the title of this the video. So once you click on this the join button, then you will see that there is this option, all midweek update. So midweek update means the daily analysis of the S&P 500. So you can use this option in order to get the daily analysis, the daily updates of the S&P 500, and you can come to know what is happening in the S&P 500, the movement of the S&P 500. You can see the movement of the S&P 500. See guys, if you are trading in options, in that case you must know the movement. Without knowing the movement, see, and it is not just about the options, but everything. Without knowing the movement, you cannot trade in the stock market. You should know the possible movement, the possible traps, the possible opportunities in the stock market. And if you notice that my members, okay, they have subscribed to this the all midweek updates, and they are getting the daily analysis, the daily updates of the S&P 500 from Monday through Friday, each and everything, all of these the updates. So guys, whenever you want to join my YouTube community, you can simply click on the join button and you'll be getting all of these the updates from Monday through Friday, each and everything. And guys, one more thing, that once you have joined my YouTube community, then you need to visit my YouTube channel page and you will see this the community tab. So this is the community tab where you are going to find and you are going to see all of these the updates, each and everything. All of the updates are there in this the community tab. Okay guys, so now comes the third point of our agenda, and this is the S&P 500 support and resistance levels. So here we are going to talk about these support and resistance levels, the maximum so this is the maximum upside movement, then the maximum, this is the downside movement, possible hold, etc. So guys, once again, if you have not subscribed to the channel, then please subscribe the channel and click on the bell notification icon. And other than that, if you want to join my YouTube community in order to get the daily analysis, the daily updates of the S&P 500, then you can use the join button that is there just below the title of this video. In this the support and resistance levels, okay, so these are a few things that we need to understand, that any upward movement for known or unknown reason will be limited to 4150 to 4160. Again, 4150 to 4160. So through any known or unknown reason, any upward movement will be limited to 415060. Okay, so as of now, in a single strike, it is not possible for the market, for the stock market, for this the S&P 500 to breach this the zone, or to or to close above this the zone. And so first it has to struggle, even if it want to move up. So first it has to struggle. It has to struggle, okay, for a few days. Then only it can move up and it can give, okay, a further bullish breakout, right? And similarly on this the downward side, there are these three. Okay, so the first one itself is the 3840, then the 3790, and then this one 3710. Okay, or 3000 3690, etc. Okay, 3710. So back to back. Okay, these are the strong supports, right? So this is what we know, that any upward or any downward movement for any known or unknown reason, will be limited, okay, to these the levels, okay, to these the zones. Now comes these other support and resistance levels. Okay, see, I will tell you that how this the movement, okay, it will hit this, okay, this support, or it will hit this resistance, and how it is going to work in the probable movement of the market, probable movement of the S&P 500. That is the last point of our agenda, right? So as of now we are focusing on the the support and resistance levels. So in this case, if you notice, 4150, 4160, okay, a very tight, very tight, this or this the very strong, this the zone, okay, resistance zone. Then 4110, last time when the S&P 500 it was trying to move up, it hit only 4100, but it failed to hit 4110. Okay, now then the 4065. Okay, so this is okay, this is not, you know, that much strong, okay, this resistance. Then we have 4035. Now this is a critical resistance zone, because beyond 4035 it is bullish, right? This is why 4035, the zone of 4035, okay, this is very critical. Then comes the immediate resistance, okay, that is at 3990. Okay, again 3990, okay, it has proven that yes, it is a good, or a, okay, again a strong resistance. But 4035, okay, it is much more stronger as compared to the 3990. Then comes the immediate, very immediate resistance, that is at 3960. So although S&P 500 tried to hold, okay, around this 3960, so but it was not seen, okay, as a still, okay, or this the critical benchmark, okay, support and resistance. So still, but the 3960, it will play its role. Okay, whenever the S&P 500 moves up or comes down, it will play its role. Okay, 3960, okay, that is the immediate, this the strong resistance. But the more this, okay, this is the zone 3937. The zone of 3937, again, the zone of 3937, okay, is critical and strong. Okay, just like this the 4035. So we have 4035. Okay, we have this okay, this thing, the 4150, okay, 60, 4035. Then we have 3937. Okay, so these are the strong zones, these are the strong resistance and support zones. As of now the S&P 500 has closed inside the zone of 3937. Okay, now the Monday will decide whether we are going to see a gap down open, okay, or there's a gap up open, and accordingly, okay, what can happen to the S&P 500 and to the stock market, right? So then after 3937, then the next the good support is at 3907. 3907 is going to provide, okay, some good support to the S&P 500. Okay, then after that we have some good support at 3884. 3884 means we can expect, so even if on Monday if it comes down, then we can expect a reversal from 3884. Okay, so it will be good, because earlier it has provided some good support, but before it can hit the 3884, it must struggle, or it must clear the 3907, right? Anyways, we are talking about the support and resistance levels. Then comes the 3840. Now just like, okay, these the zones, okay, that I have described, like 4150, 60, 4035, 3937. Similarly we have 3840. 3840, this is again a very strong support zone, very strong support zone. Even if the S&P 500 comes down, it is going to find some good support. Even if it breaches for some reason, it will see a reversal. 3840 is going to hold the S&P 500. Okay, I'm not saying that after hitting the 3840, then it will be then it will be back to its, you know, this is the bullish trend. No, I'm simply saying that whenever it comes down, 3840 will give it support for a day, for 2 days, okay, or so, and then it can breach and then it can come down, right? After 3840, then we have 3790. Again a very good support, sorry, very good support. Thereafter we have 3737. Okay, and historically from 3737 to 3710. Okay, this has acted as very strong support as well as resistance zone. Okay, so now we can see that there are, okay, so 3737 and 3736 and 3710. Okay, so now we can see that there are multiple strong supports, okay, for this S&P 500. So whenever it comes down, it is going to find, okay, these are strong supports, or when it moves up, then it is going to find 4035. Beyond 4035, it is bullish. Below 3937, it is bearish. It is bearish to 3840. Below 3840, it is bearish to 3790 and to this the zone. Okay, so this is how these are support and resistance zones are going to work for the S&P 500. And guys, once again, these are support and resistance levels, okay, or these the zones. Okay, this is what I have calculated myself. You are not going to find these in this the technical indicator. So when you try to look for this support, standard support and resistance levels, okay, then you will see that these numbers are not mentioned there, because this is what I have calculated myself. Okay, and if you want to back test, okay, or if you want to see, okay, this the accuracy of these, then you can watch any of my previous S&P 500 technical analysis, and you will see the accuracy of these the levels, right? So guys, this was the support and resistance levels for the S&P 500. Now let's talk about now let's move on to this the next part, the fourth point, okay, of this the agenda of this S&P 500 technical analysis, and that the fourth point is SP500 technical analysis on the daily chart. Now guys, this is the fourth point of our agenda, and the fourth point is the SP500 technical analysis on the daily chart. So earlier in this, the first point of our agenda, we have talked about this the S&P 500 technical analysis, but that was on the weekly chart, the broad big picture. Okay, but on this the daily chart, okay, the daily chart of the SP 500, we are going to see that what the technicals are saying about the SP 500. Okay, whether it is going bearish or whether it is going bullish, etc. So first comes this the Ichimoku. If you see that the S&P 500 is trading above the Ichimoku cloud, this means that the S&P 500 or this the SP 500 is bullish through the Ichimoku, right? Then comes the Bollinger Bands. If you look into the Bollinger Bands, this is the lower band of the Bollinger Band, this is the median of the Bollinger Band. Because the SP 500 has closed between the lower band and the median of the Bollinger Band, it is bearish. So the SP 500 is bearish through the Bollinger Bands. Then comes the moving averages. Now this is important. So moving averages, if you see, as of now, the S&P 500 has cleared all of the moving averages on the bearish side. Secondly, there is a crossover, but not an absolute crossover. This is indicating that the S&P 500 is now getting bearish and is now going to be considered as bearish through the moving averages, right? Now comes some other technical indicators. So when you see, okay, this is the MACD. So the MACD is more than the signal. Sorry, MACD is less than the signal. This means that the S&P 500 is bearish through the MACD, but so this the S&P 500 is bearish through MACD. This is the directionally bearish. Okay, this is directionally bearish. However, both MACD and the signal, are still positive. What it means? This means that the S&P 500 is still in the short-term bullish trend, because through MACD and the signal both are positive. So until and unless the MACD and the signal both become negative and also it is directionally bearish, we cannot say that the MACD is absolute bearish. Then comes the stochastic RSI. Now when you look into the stochastic RSI, okay, it is just a little more than this the K channel is okay, it is just a little more than this the D channel. However, both K and D are below 10, are less than 10. This means that the stochastic RSI is going to be considered as bearish. Okay, and then the divergence is normal, not a problem. Volatility is normal, okay, again not a problem. So guys, what we have noticed is that the SP 500 is bullish only and only through the Ichimoku, and now it is bearish through almost all other technical indicators. This indicates that now the S&P 500 is bearish on the daily chart. But now the question is that whether this bearishness of the S&P 500 is going to push it down or it is going to hold. Okay, that is the real question, right? So that we are going to see in our next part. Okay, that is the probable movement of the S&P 500, right? Because see, technically this is what is happening, but we must not forget that the MACD and the signal both are still positive. This means that still it is trading in this the short term bull trend. Until and unless both becomes negative, it is not confirmed, or it cannot be confirmed that the S&P 500 is bearish. So as of now, what can happen is that although it is bearish, technically bearish, 70% bearish, this means that yes, it can come down, it can come down, but this the downward movement, this will be limited. This will not be like very heavy movement, very heavy downward movement. And I'm not talking about Tuesday when the CPI data will be out, right? So guys, now let's move on to this the last point of the agenda of this, the SP500 technical analysis, and the last point is the probable movement of the SP500 in the coming week. We are going to see that how the SP500 is going to move in the coming week from Monday through Friday. So guys, this is the fifth point of our agenda, is the probable movement of the S&P 500 from Monday, that is December 12th, to Friday, that is December 16th. So we are going to see that what is going to happen in the S&P 500 from Monday to Friday. So again guys, December 16th, okay, it is the monthly expiry. So guys, once again, if you have not subscribed to this channel, then please subscribe the channel and click on the bell notification icon. And other than that, if you want to get the daily analysis, the daily updates of the S&P 500, then you can join my YouTube community. You can click on this, the join button, that is provided just below the title of this video. So guys, in this, the probable movement, we first need to understand, or we first need to see that the shape of the candle, okay, that was there on Friday. The shape of the candle, okay, it is a bearish candle, heavy bearish candle, okay, a kind of bearish cusp, okay, that we can see. So what it indicates? It indicates that there are bearish sentiments in the market, in the stock market, in the S&P 500. Other than that, the closing of the candle was almost the low of the day. This simply means that the sentiments were so bearish, okay, in this the last half an hour or this last hour, okay, on this Friday, that it came down, the S&P 500 came down to close just around the low of the day. What it means? This means that on Monday the same sentiments will be translated. Okay, so when I say that the sentiments will be translated, so on Monday, okay, as of now I cannot confirm that there will be a gap down open, but yes, what I can confirm is that on Monday initially there will be heavy bearish sentiments, and these heavy bearish sentiments can push the stock market down, the S&P 500 down, okay, irrespective of open. It means chances are that we can see a gap up, chances are that we can see a gap down open, okay, but that gap down is not yet confirmed, okay. But yes, there's the bearish sentiments, okay, these are there, okay, for sure the bearish sentiments are there, okay. So on Monday we can see that there are these the bearish sentiments. This means that even if there comes a gap up open, even after this the gap up open, we will see that the S&P 500, it is coming down, okay. Now it all depends that whether the zone of 3937 it will be hold or not, okay, simple. Now when the S&P 500 it comes down, so the zone of 3937 is going to hold, okay. But if the zone of 3937 fails, in that case the S&P 500, okay, it is destined to come down to what? Come down to 3907. It will come and hit the 3907, okay, or so we can say this will be 3907, okay, or this the 3900, okay, 3907 to this the 3900, right? So now so this is the point, okay, where we can expect the S&P 500 to hold and to give a reversal, and if there won't be any reversal, then it will be holding, okay, for the rest of the day. As simple as that. Now there is one more thing, okay, that is that if the S&P 500 it comes down, okay, and it comes down to 3907 or 3900, then what will happen? Then the K channel and the D channel of the stochastic RSI both are expected to become zero, absolute zero, okay. Now again it will depend, okay, on this the weight or this the movement of the S&P 500 that will define. So on Monday, okay, we will look into this the downward movement, and accordingly, if you are my YouTube community member, okay, then I will tell you whether both of these are zero or not, because If both of these become zero, absolute zero, and if the S&P 500 holds for the rest of the day, holds as in bearish for the rest of the day, then what will happen? Then on Tuesday, so on Tuesday what will happen, that there will be very heavy technical, there will be very heavy, these are bullish sentiments technically, because the K and the D channel, okay, these both of these will be zero, right? So now Tuesday, because the CPI data will be out at 8:30 a.m. Eastern time, okay, CPI data will be published, okay, pre-market 8:30 a.m. Eastern time. So now what will happen, that even though both the K and D will be zero, this means that the aftermarket, okay, aftermarket, the S&P 500 and the entire stock market, it will show the or it will so it will simply show this the reversal, right? Now what will happen, that 8:30 a.m. the CPI data will be out. If the CPI, if the inflation is more than the previous one, then the entire stock market, the S&P 500, okay, everything will tank on Tuesday itself, okay. Even though both K and D are zero, no problem. On Tuesday itself, the entire stock market, okay, it will tank. But Tuesday, okay, there will be a magic. What kind of magic? Even though the entire stock market will tank, even though we will see a heavy gap down open, even though we will see that it is coming down on Tuesday, surprisingly we will see a heavy reversal, a heavy retrace, a heavy reversal. This is not supposed to happen, okay. As such, this is not supposed to happen, because the data, because the inflation, okay, it is more than expected, okay. But because the K and the D channel, okay, both of these will be zero on Monday. See, as of now we are simply anticipating that if on Monday, if the candle is formed, if there comes a bearish candle, okay, or a heavy bearish candle that is formed, okay, that is formed on this Monday, then both K and D will be zero, right? Based on that anticipation, okay, what we are seeing is that if on Tuesday, if again, okay, if there comes a heavy gap down open, immediately upon gap down open, if it further comes down, then magically, okay, not magically actually, this will be technically, we will see a heavy reversal, intraday reversal, and we will see that the S&P 500 has survived, okay. So that will happen initially. Now what will happen in the rest of the day, okay, that I will update you, okay, through this the community notes, if you are my YouTube community member. So this the mayhem in the market, entire stock market, okay, this the upward downward movement, this will be, okay, on Monday and Tuesday, up to Tuesday. After Tuesday, the entire stock market will stabilize. After Tuesday, now we will come to know whether it is going bullish or whether it is going bearish. As simple as that, okay. Now one more thing, if on Monday there comes this the heavy bearish candle, if on Monday there comes a heavy bearish candle, okay, or even a normal bearish candle that compels the stochastic RSI, the K and the D channel, okay, to become zero. And if on Tuesday there comes this the CPI data, this CPI data is less than less than the previous one, then what will happen? There will be a heavy gap up open, this gap up open, okay, the open will be the low on Tuesday. In such a case, the open will be the low, and we will see that intraday it is like 3% up, 4% up, maybe like 5% up. And intraday it can move up so high that it can hit this the previous high of 4,100 or 4,110, right? So because now why this, why this exceptionally, okay, this is the heavy movement, because technically on Monday we are anticipating that both K and D will be zero, okay. So there is already this the bullish reversal, okay, it is due, it is there, it must be. And even without the CPI data, the S&P 500 in such a case is expected to see 2 to 3% up, okay, intraday movement. With this the favorable CPI data, means less than inflation, okay, less than the previous one, this movement will be converted to 4% or maybe 5%, right? Again guys, this all depends on Monday, what is going to happen on Monday, whether on Monday this the K and the D channel both will become zero or not, okay. So again, if you are my YouTube community member, then okay, by the time of closing I will tell you that whether both are zero or not, and I will tell you a strategy, okay, a very simple strategy that will help you to make good money, okay, some good money. So that will help you to make some good money based on a very little investment, okay. So again, this is what I will tell you in the final update on Monday. Okay, again, if you are my YouTube community member, so you will get, okay, this is the final update, okay, and this is the possible movement. And guys, now the second scenario is that if the K and D becomes non-zero, or if the K and D, okay, remains non-zero on Monday, if the movement it remains confined or it remains neutral, just muted, silent, okay, in that case K and D become K and D, okay, both will be non-zero, right? So what will happen in this case? In that case, what will happen? We will be dependent on the CPI data. If the CPI data is more than expected, in that case, we know that the next day, okay, the entire stock market, the S&P 500 will tank, okay. But in this case, the next day, the reversal will not be seen. That we were anticipating earlier because of this, the K and D word, because both of these were zero. If the CPI data is less than expected, then we will see an intraday upward movement, but that movement will be limited to like 3% or something. Okay, not 4 or 5%. That movement will be 2 or 3% limited, right? So that is the difference with, okay, with this the K and D, right? So guys, this is what we have seen, okay, based on this the movement. Now again, this is the downward movement and this is the upward movement, okay. Now comes the second scenario. The second scenario, okay, is that if on Monday, so generally what happens is that the stock market, okay, it gives you something, okay, this sometimes, not always, okay, remember, not always, but sometimes an opposite movement, okay, just before the day, okay, when it is, for example, on November 10th, the CPI data was about to be published, okay. Yeah, so the CPI data was scheduled to be published on November 10th, but on November 9th, we have seen that an unexpected bearish movement came in the entire stock market, in the S&P 500, Dow Jones, and in the Nasdaq. Okay, so this the opposite movement is seen just a day before the anticipated the CPI data. But again, guys, this is not 100% true, or this is not seen always. Sometimes it is seen, sometimes you will see that the entire stock market, it is just silent, up down, just okay, sideways, dull movement, nothing, okay. So you cannot say, or you cannot you cannot just rely, okay, on this thing. So again, guys, do not rely, okay, on this the fact that one day before, okay, you will see this the opposite movement. It may or may not be, and also this is not a confirmation that you will see, because sometimes we have seen that the market manipulators, okay, these are market movers, they have willingly, okay, gave this the movement. For example, okay, they gave this the bullish movement, and the next day, okay, again it was bullish. So you cannot say that because, okay, one day before the CPI it is bullish, so the next day it will be bearish. It may or may not be. So again, we will look into, okay, this the data, okay, through this the other options data, okay, stocks data, okay, futures data, and other this thing. We will do this the data analysis on Monday. We will look into this the movement of the S&P 500 and the entire stock market, and accordingly we will see, okay, that what is the percentage probability that we can see an upward movement, okay, on Tuesday, or what is the percentage probability that we can see this the downward movement on Tuesday, right? But yes, this thing is clear, okay. If on Tuesday, if the S&P 500, okay, or the entire stock market comes down, then that will be the beginning of this the bearish trend, okay. Again, so not beginning, but that will be the resumption of the long-term bear trend. And this time the S&P 500, okay, it will be coming down further. If it remains, or if it survives, then there will be a center rally, then it will move up, and again it can move up to 4150 to 4160. Now guys, the movement on Wednesday, Thursday, and Friday, now it will depend on like what is the movement on Tuesday, okay. Again, whatever is going to happen on Tuesday, it will depend on what has happened on Monday, okay. And whatever is happening, whatever is going to happen on Monday, and this the Monday thing is heavily dependent on the K and the D channel, that what is the values, or what is the value of the K and the D channel on Monday. The value of the K and the D channel will tell us that if there will be a bullish movement in the entire stock market on Monday, then how much we can expect. If there will be a bearish movement, okay, on this Tuesday, on in the entire stock market, then whether there will be a reversal or not. So this will be defined, okay, mostly by, I'm not saying that only the K and D, okay, will define, but mostly or heavily the K and D will define this thing on Monday itself, okay. So as of now, it is not So as of now, okay, it will not be wise to comment on the movement of the S&P 500 on Wednesday, Thursday, and Friday, because that heavily depends on what is going to happen on this the Tuesday, and Tuesday's movement heavily depends on what is going to happen on Monday, right? So once again, guys, if you are my YouTube community member, then I will tell you that based on the movement on the Monday, okay, what are the possible, these are scenarios, very likely scenarios we are going to expect on Tuesday, okay, even in the best case or in the worst case or in the neutral case. But yes, but what we know is that any upward movement, it will be in the coming week, it will be limited to 4150 to 4160, because now an event is in the picture. Any downward movement will be supported by the zone of 3840, then the zone of 3790, then this, okay, then these the two levels. This, the downward movement will be supported by this, and the upward movement here. So in the coming week, okay, because an event is in the picture, that is why we have this, okay, this the that is why we have this the zone in the picture. But in order to narrow down the zone, we can say that the 3840, it should be able to hold, okay, this is the S&P 500 from coming down, okay, in this the downward side, and then in the upward side, okay, it will be this is the 4150 to 4160, but before that it has to breach the 4110. So we can say that from 3840 to 4110, and this is 3840, okay, based on like what happens on Tuesday, what happens after the CPI data is out, okay, because this is very important data, okay, whatever happens, okay, based on that, we will see that the movement of the S&P 500 is confined to 3840 to 4110, okay. If there comes any exception, okay, so that I will update you through my community notes, okay, through these the daily analysis, through these the daily updates. So guys, once again, if you want to get this the daily analysis, the daily updates, okay, these are structured updates, okay, structured analysis of the S&P 500 on the daily basis, then you can join my YouTube community. And in order to join my YouTube community, you can click on this the join button that is there just below the title of this the video. So guys, once again, if you're not subscribed to the channel, then please subscribe the channel and click on the bell notification icon. And guys, if you have any question that you want to ask, then please feel free to comment. So guys, this was my S&P 500 technical analysis for the week of December 12th, 2022. That is from December 12th Monday to December 16th Friday.